Two and one. Hello, everybody, and welcome to another Capital Gains Tax Solutions and Expert Tax Secrets podcast, where we believe most high net worth individuals and those who help them they struggle with clarifying their capital gains tax deferral options, not having a clear plan is the enemy. And using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated assets, defer millions of dollars of capital gains taxes, eliminate the estate tax, so you can create and preserve more wealth, or help your clients, friends, and family do the same. Hey, I'm your host, Brett Swartz, and each and every episode, I'm joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He's out of the great state of Alabama. He's a co-founder and managing director of Stoke Equity Partners, and he oversees the acquisition department, investor relations, portfolio management, and firms debt relationships. And he's been involved in over $200 million of real estate transactions throughout his career. They're focused like a laser on helping all of us today and invest into industrial cash flow properties to create and preserve more wealth. And that's what we're going to be talking about today. Please welcome to the show with me, Grant Reaves. Grant, how you doing?
Good. How are you? Thank you for having me.
Hey, I'm doing well, sir. Thank you so much for being here. For our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, certainly. So, started off in commercial real estate brokerage right after college, mainly in the limited service hospitality realm. Primarily sold things like Holiday Inn Expresses, Hampton Inns, Comfort Suites, those kind of properties throughout the Southeast and some into the Midwest. After a few years at a regional, kind of more local firm here in South Alabama, moved over to Marcus & Millichap, continued to sell limited service hospitality through that. And in 2020, prior broker friend of mine, Jeremy Friedman, and we'd always been friends on the brokerage side, but always wanted to get on the principal side. And through COVID, kind of had a little bit more time to discuss further plans and what we wanted to do long term. And so we came up with the idea for Stoic, started putting together the framework for it, started talking to investors, deciding asset classes, all that kind of fun stuff. Did our first deal in 2021 in the self-storage space, continued to do a couple 100,000 square feet of self-storage investing in 21 and 22. And then in 22, really kind of saw self-storage. I think the long term is a great asset class, but got a little bit overheated. And we always loved multi-tenant flex industrial, so we took that as an opportunity to kind of move over in 22 to that new asset class. We've bought 300,000 square feet of flex in the past year, or I guess year and a half, and have another 374,000 under contract right now.
Fantastic, Grant. I love that. And before we dive into ways that we can work with Grant, if you're interested, you can go to, by the way, Stoic ep.com. That's STOICEP.com to learn more. But Grant, I want to take one other step back. I believe we've all been given certain gifts in this life, and these gifts can be given to us to be a blessing and help to others. So I'm curious, what are those one or two gifts that you feel like Grant's kind of naturally come to you? And how does that help how you help and bless people today?
Certainly. So one of my biggest gifts was meeting my first kind of managing director in commercial real estate. I was, I guess, 21 when I got into commercial real estate and needed a mentor, somebody to let me work under them, and had a gentleman by the name of David Milstead who took me under his wing and taught me what he knew, and that was a huge leg up in this world and a big help. I would say another was just generally meeting a lot of my different business partners, whether that's Jeremy or some of our other partners. It's you never know how people are going to be able to bless you long term when you first meet them, but the connections that you make along the way are definitely what's gotten I am today. I try to use that moving forward. I have a lot of kind of younger people getting into business that I always do try to help. So anybody that's newer in the business and wants to have a conversation and understand kind of what we do and how we got here, I'm always happy to talk to anyone about that.
Fantastic. Absolutely love that. Yeah. Having great mentors to help you out to grow. So let's dive right into the topic at hand, which is industrial cash flow investing. So Grant, what's the number one secret to industrial cash flow investing?
So what we do is multi-tenant flex. So that is multiple tenants. So anywhere from say 10 to 30 tenants in a complex. And these are smaller office warehouse suites. So we do not do the large scale bulk warehousing, Amazon warehousing, big 200,000 square foot tenant kind of stuff. We do say a 100,000 square foot building made up of a lot of 5 and 10,000 square foot office warehouse suites. So these are more business park kind of assets. The secret we feel like of that is that you have occupancy mitigation. Because you have so many tenants, even if you have 2 or 3 leave, it's not that big of a deal. And the more bulk warehousing industrial side, if you have 1 or 2 of your tenants leave, you could be negatively cash flowing for a couple of years, re-tenanting those spaces. Also, the biggest reason we do this asset class is none of it's been built in the past 20 years. So we have huge supply demand metrics that are really in our favor. We're buying these for well below replacement costs. The numbers don't work to build new product on top of us, and it's just a very undersupplied market in the specific markets we play in, which is the Southeast.
Excellent. So it sounds like the ability to quickly churn over if a tenant goes out, the occupancy renovation is pretty seamless or quicker and not as expensive. Number one. Number two, supply demand just is the imbalance, just the sheer necessity of the growing industrial market.
Yep.
And then you said it's the flex space, which is the key, right? This is more of the middle market, or I guess smaller to mid-sized companies, right? Versus
Yep.
a huge, large FedEx industrial warehouse, which is a whole nother space, right? This is going to be something that's needed. Like, what? Give us some average tenants and what that looks like. The tenant mix.
Yeah. So we will have some national tenants. So we have Terminex in quite a few of our buildings. We have Icy, actually, the convenience store Icy is a tenant in some of ours. So you do have some nationals, but you also have a lot of like local HVAC companies, local general contractors. More mom and pop kind of or regional suppliers of different type of logistics or manufacturing or kind of smaller tenants like that. We do find that through that, most of those people is protected from work from home because people do hear that office component a little bit and get a little bit wary of that. But if you need to have 60% of your working space be warehouse, you can't go work from home. You need to have space for whatever your business entails. You have to have that warehouse space. So it's protected from that whole work from home piece of office as well.
Excellent. That's a great intro. Now let's dive right in, and maybe you can even just share a little bit more of some particular deals that you have live.
Yeah.
What people could look at if they were considering and maybe investing with Stoic.
Certainly. So we currently have a fund open, SCP Industrial Holdings One LLC. We are raising $25 million in equity to buy approximately $75 to $100 million portfolio of multi-tenant flex. We have 3 deals currently under contract into that fund that we will close on into January, beginning of February. We have 158,000 square feet in Jackson, 128,000 square feet in Louisville, Kentucky, and 90,000 square feet in the Atlanta metro. Diving into those, we can take the Louisville asset if you'd like. We like to buy some of these assets that sometimes have larger office components to them, just because those are not as such in favor that you can get them. They're usually going to be lower occupancy because of the office build out piece. And that's how Louisville is. So it's currently about 65-70% all office, but it's mid 80s occupancy. So what we'll do is we'll go in there, we'll rip out the office, turn it back into more 50-50 office warehouse flex spaces. And we're able to drive up rate and drive up occupancy by doing that. So that's one deal that we're doing. The Jackson, Mississippi deal, as I mentioned, 158,000 feet. About 50% of those tenants are actually nationals. Very nice property, very good cash flow. We have a life insurance company that's going to do the debt for us at under a 6% interest rate, which we're very excited about these days. And that will be more of the cash flow side, because the fund overall return metrics are 7 to 8% cash on cash on the 5-year hold with a 15 plus IRR. That's all net to the investors. And so we like to pepper in higher IRR with some more cash flow assets. So the third property in the fund is the McDonough, Georgia asset. It's 90,000 square feet. We're buying it for $64 a square foot. Market rents are $12. And so there's a lot of meat on the bone there. It'll take a few years to get it stabilized, but that's a very high IRR driven play for us. So we'll kind of mix that in with the Louisville and Jackson deal to kind of be able to achieve that cash flow with high upside on the back end.
Nice. I like the diversification within the fund. I like the three different locations, and so and I also like the Southeast where you mostly focus on, right? Mm-hmm. And so let's focus like a laser on that first one. I like it. You're doing 50% office to flex, so it's going to be a conversion, right? To make it more useful and obviously kind of drive the rents. So what type of returns is someone looking at if they put $1 million in on average? What can they be expected in year one, and then over maybe a 3 to 5 year period?
So it is a value add deal. And so those are the first 3 deals that will go into it. The whole portfolio will be 7 to 11 assets. But because it is value add, your year 1 is going to be much lower cash on cash than your year 5. So it's a 5-year closed-ended fund, by the way. And so it'll all close out December of 2028. So years 1 and 2 will probably be in that 4, 5, 5.5% cash on cash range. And then that will build to 7 to 8%, and then ultimately 9 to 10% on the last couple of years to average back into that 7 to 8% cash on cash. Total equity multiple will be in that 1.7 to 1.85 range over the 5-year with the IRR 15 plus.
Got it. Excellent. And then you're also are you doing cost seg on that to get some bonus
Hmm.
depreciation,
Yeah, we
offset
do.
some of the tax flow there?
Yep, we cost seg everything that we own, and we put that straight through pari passu to our investors on ownership. We don't take a larger RECA or anything like that off the top, which I think some sponsors do. But yeah, we just distribute that directly back out. So um, very good on the tax deferred piece, and yeah.
So overall, you're looking at an industrial value add flex industrial acquisitions office to go back into some more flex is the
Mm-hmm.
idea, and it's 7 to 11 assets over a 5 year closed ended fund, 1.7 1.85 multiplier, and then about average, you said around 7% on average cash on cash return over the life of the term. Yeah.
Yep.
Okay. And on a scale of like, 1 to 10, with 10 being the most conservative and one being really risky, how do you feel like
Yep.
industrial compares against other asset types like hospitality or multifamily or mobile home park?
It is our well, I just on hospitality, obviously the largest. I was in hospitality for a long time, so I can speak to that. Obviously, the largest problem with hospitality or problem and advantage of that is that you reprice every single day, so you have nothing really built in long term. But you can also get very high cash flows from that. So I would say that's obviously the more risky side. We lay somewhere in the middle because of such little supply out there and the growing demand and in just growing markets in general. We feel like we're very less risky than other asset class, but also have a lot more upside than the other asset classes do as well. So it kind of puts us in that sweet spot in the middle.
Excellent.
Yeah.
Yeah, I like that. Now, and I like industrial, by the way. I like industrial, mobile home park, multifamily are my favorites.
Yeah.
But more than all of that, fundamentally, I like investing into value add commercial real estate, right? And now, with that being said, if you can have experts like Grant, who has expertise in brokerage and now in acquisition and development with his partners, to me, and then they're in locations like the Southeast, put all of those things together, the fundamentals start to look very good, right?
Mm-hmm.
Solid. And there's not a lot of industrial value add guys out there that at least I've found so far. I've seen a lot of
Yeah.
multifamily, a lot of mobile home park. So if you're listening to this and you're curious about what my opinion is, I love industrial, and I think industrial is here to stay, especially the flex space, especially value add with proven operators that can go in there and do exactly what Grant's talking about doing. It's going to help to diversify the portfolio away from the mobile home parks, away from multifamily. Not that you don't do those as well, but
Yeah,
this
it's
is
great
a
asset
great,
classes.
yeah, there's just a
Yeah.
good way to mix it in. So if you want to learn more about Grant Reaves, you can go to stoicep.com. That's stoicep.com. I want to shift to 1031 exchange. And, Grant, our backgrounds are both Marcus and Militap.
Yeah.
And, on day 2, I always say we learned about a 1031 exchange, and we have, you have MNet, you have all the deals that go into the Marcus vault to start, and then, sit there for 45 days before they go to the LoopNet, and then all of the things. And it's the number one investment brokerage firm, more sales in the country than anyone else. Amazing training, amazing folks, great mentors. I mean, I can only have nice stuff to speak about Marcus Millsap. However, the 1031 exchange wasn't always our friend, right? So I'm curious, what was as a broker, perhaps it's our friend because it can help us in some ways do deals quicker. However, it also can prevent people from selling because they don't have that 1031 lined up, or they're running out of time, or they just, they don't want to feel the pressure of overpaying for a property. So what would you say you found is the biggest frustration when it comes to a 1031 exchange as it pertains to your clients over the years, Grant?
So it would definitely be as markets rose over the past, from 2018 till today. I mean, obviously we had COVID in the middle there, but that was always the biggest problem as a broker or now as a buyer, is that you have a lot of sellers that sit there and say, well, we can't replace this money. So while we would love to sell it to you for $6 million, anywhere. So for that reason, we're not going to sell. That's always been the biggest issue for us on the brokerage side as well as on the investment side.
Yeah, and we call it the shotgun wedding, right? And you got to get
Yeah.
stuck in a 45-day identification, 180-day wedding, and sometimes it makes sense, sometimes it doesn't, and that becomes the challenge. Enter what we do here. It's called a deferred sales trust, and it eliminates the need for the 1031. But even better than that, the funds can go into passive real estate funds, like the industrial fund that you guys have. It can come from assets that are unlike kind, right? Like it come from businesses, crypto. It can come from primary home sales. It can save a failed 1031 exchange. In fact, we believe it is the future of all really multi-million-dollar asset sales. and it has this close to 30-year track record. But I'm curious, someone like yourself, Grant, we met for the first time at the Family Office Club.
Yeah.
You're learning about this. What was your first thoughts when you heard about the deferred sales trust?
I think it's genius. I mean, that the issues that you just discussed in the time frames and everything like that on the 1031, I don't know enough about it to really get too into it, but we definitely are going to look more into it, learn more about it, because I agree with you. It sounds like the future of where that whole world is going, where it should be going. It makes a lot more sense than just doing a 1031 into another property with this very tight time frame. And you're going to eat up a lot of alpha doing that.
Absolutely. And if you want to learn more about that, you can go to a couple of places. You can go to capitalgainstaxsolutions.com. You can also go to experttaxsecrets.com. We just released the best 1031 exit plan, and that involves not only the full 1031 service, but it also involves the deferred sales trust as a backup plan in case it fails. So whether you're doing a regular 1031 exchange, a reverse 1031 exchange, whether you're doing a Delaware statutory trust or a deferred sales trust, the best 1031 exit plan covers every single aspect. You don't ever want to get caught in a 1031 without a backup plan or an alternative. Just go to experttaxsecrets.com or capitalgainstaxsolutions.com to learn more. That being said, Mr. Grant, are you ready for the lightning round?
Certainly. Let's go.
All right. Knowing what you know now, if you could go back to your 25-year-old self, what's the one gold nugget make sure to tell yourself to do?
I would start buying real estate earlier. Started when I was 28, would have started when I was 25.
Excellent. What's the number one book you recommended to give for the most of the past year?
Sorry, I need to look this up. Private Equity Real Estate Investing by Sean Cook.
Excellent. What's the number one way you're using ChatGPT?
I really don't use it very much. Actually, I take that back. I get it to rewrite and fix my grammar and emails that I write, long form emails and reports and that kind of thing.
Beautiful. What are you most curious about right now?
Probably where interest rates are headed in the next 2 years. I think there's a lot of unknowns there.
Absolutely. What's the number one leadership quote or theme that you strive to live by?
Stoicism, obviously. I mean, that's really where we are. That's why we named our company that. Keep your head down, power through, don't get emotional about the problems, and keep on marching forward.
Awesome. Knowing what you know now and helping all the people you've helped, Grant, what would you say has been the kind of the driving habit for your success over all the years? What's the thing that helps you to stay centered in your values and stay charged up to move forward, to reach new heights?
I think doing the same thing every single day, having a good routine, pressing forward, not going over after the shiny object every day, being really well, having a good foundation in who you are, what you're doing, and what you're trying to do, and using every day to march toward that, not trying to find shortcuts all the time.
Excellent. I love that. Yeah. Good routine, pressing forward, staying focused, and having a real solid foundation on what you're doing and how you're doing and how the people you're going to help. I love that, Grant. Hey, Grant, I want to thank you for being on the show. I want to thank you for sharing your wisdom on the industrial market and some of your deals that you're working on. I want to encourage you to keep using your gifts to bless people with adding value to industrial cash flow investing and help people create and preserve more wealth. For our listeners who want to get in touch with you, could you remind them one last time what's the best place for them to find you?
Yeah, so my email is greaves, that's GREAVES at stoicep.com, and our website is stoic, STOICEP.com.
Excellent. Thanks, Grant, for being on the show. And also want to thank our listeners for listening to the episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated assets of any kind, by the way, cryptocurrency, businesses, real estate, stock, public or private. You can go to capitalgainstaxsolutions.com to get started. As well, we have the best 1031 exit plan that just got released. To me, we say that friends don't let friends get in a 1031 exchange without a backup plan, right? Do not work and go to a 1031 if you're not going to have a backup plan. It's the worst calls that we get every single week. Typically, someone saying, "Oh, I wish I could do that 1031, but I'm with this different company who doesn't either know about the deferred sales trust or will not cooperate." So don't get stuck in 1031 jail. Get the best 1031 exit plan right now by going to experttaxseekers.com or capitalgainstaxsolutions.com. Check out the book, the best-selling book on Amazon, Building a Capital Gains Tax Exit Plan. And other than that, we will talk to everyone again real soon. Bye now.